If you clicked on this presentation, it's probably because you either own PayPal or you're thinking about owning PayPal. And when we say the stock has plummeted, it has. And we put the subject line here that says bargain or bust. Well, that's a bit clickbait because PayPal's an $84 billion company and the likelihood of them going bust seems quite low. However, we want to examine whether or not there's a bargain to be had here because shares have absolutely plummeted. So from peak to trough, that's about over a year's time, shares have fallen 76% versus a NASDAQ return of 23%. And what's interesting here is that this firm is actually 16% below the pandemic low. If you recall, in March of 2020, we had the pandemic shock to the market that was very short lived. And that means PayPal is actually trading less than around that lowest time they traded when there was all that pandemic panic. So just today, the stock set a 52-week low. So it continues to be lowest that it's ever has been, at least in the last 52 weeks. When we look at our simple valuation ratio, which takes market cap and divides that by annualized revenues, we can see that it's quite low at 3.2, though lately valuation ratio hasn't been overly relevant because frankly, everything's low. So let's look at a short history of PayPal. So they were snapped up by eBay in 2002 for $1.5 billion. They then returned to the market and had an IPO in 2015 at a $52 billion valuation. And as I said, that today they're valued at $84 billion. Now, when we look at the size of this stock, this is a little diagram we put together that describes the sweet spot where we like to invest in companies, which are large companies, anywhere from 10 to $100 billion. But once a firm gets over $100 billion, then it becomes more difficult to grow rapidly. And you'll probably see some of that with PayPal. So this is quite a large firm compared to those we typically look at. And the way we consider firms over $100 billion is that when you should be starting to trim some of your profits. Now, when we look at how PayPal makes money, there's really two main constituents here. The consumer side of the business, which many of you are probably familiar with, and the merchant side of the business. And these two platforms interact. Now, one of the first problems that you'll find with PayPal is trying to understand just how they're making their money. Now, before we get into that, I want to talk a little bit about market share. So when it comes to payment platforms, PayPal is a market leader. We love investing in market leaders, so that's a good thing. You can see here they have a majority market share. They also own Braintree, so they have at least 52% of worldwide payments market share, which is quite high. So that's a very good thing for PayPal because we like to invest in leaders. Now, when we look at total payment volume on their platform, this is a common metric used by payments firms. And you can see here we've charted PayPal, Adyen, and Block. You can see that PayPal is significantly higher than the others. Now, when we look at other metrics, so things like active accounts and transactions per account, which is kind of their equivalent of net new. Are they able to upsell existing customers? And of course, there's total payment volume, which they take a small cut of that, and that cut is their revenue, and then they're generating a great deal of cash from that. Now, in 2020, eBay accounted for 13% of their total revenue. Last year, that dropped to just 6%. So that relationship they've had with eBay sort of soured. And when you look through their investor deck, they're constantly talking about ex eBay, trying to show a better picture to investors since eBay bailed. And this is exactly why we are very serious about customer concentration risk, because then things like this will happen. So they had a bit of a falling out with eBay. However, they still plan to generate a great deal of revenue. And you can see here that as of 2020, they were realizing around, just a second here, this slide isn't loading. So they realized $21.6 billion in revenues. That jump, or is expected to jump to $50 billion by 2025. So more than doubling their revenue in just 3 years' time. We'll see if that happens. But what we're having a hard time understanding is how the firm makes money. Now, we understand they're a payments platform and they take a cut of all the volume that goes through their platform. But when you look at the buckets they've provided here, you take 2021, over 90% of the revenues fall into this bucket called transaction revenues. And then you have a very small percentage that says revenues from other value added services. Well, first of all, one question we might have is what's the breakdown between merchants versus consumers? So that's very relevant because when there's a recession, when the purse strings tighten and consumers stop spending, that's very relevant to the PayPal thesis. There's also this notion of industry exposure. So if we took a look at all the merchants on their platform, what industries do they typically fall into? And then, of course, there's crypto exposure, and we're particularly concerned about that, especially when we look at firms like Block. And we don't get any transparency around how PayPal's various irons in the fire are contributing to their top line. So one thing we do know is that the firm was quite pumped because of the pandemic. So the idea was that everybody's going to be paying for things online instead of shopping in stores. And they added all these new accounts. So in the last 2 years, they added 122 million net new active accounts, nearly 30% of their total active accounts. That's a big number. Um, make about only a third of PayPal's customers make up the vast majority of their payment volume. So their CEO was talking in a recent earnings call about how they're not going to chase all these one and done accounts. They're not worth the company's marketing dollars. So you need to take their customer growth with a grain of salt. And maybe there was a little bit too much optimism around how much they would benefit from the pandemic. Now, when we look at the consumer financial services, again, we don't have any idea how much money is coming from the consumer side of the business versus the merchant side of the business. We're led to believe that the majority is on the merchant. But when we look at the different things that consumers can do here, there's a couple concerns about areas that PayPal is looking to expand into. And they're the two bottom bits that you see there are concerning, along with buy now, pay later. So you have remittance and crypto investing. And we wouldn't even quite say crypto speculating. So let's talk a little bit about crypto. Now, this is taken from Block. And you can see here that Block actually counts when they look at their um, revenues, they actually count the sale of Bitcoin. We think that's taking the piss. Simply saying that you sold Bitcoin and at the cost of Bitcoin, and then of course they capture the delta there, right? That hardly seems like revenue because you have a bunch of people on your platform that are buying and selling Bitcoin. Is that real revenue? That doesn't compare to traditional transaction based revenue. So the throwing of Bitcoin or crypto into the mix without providing that granularity so we can see contributions is really a problem. We don't know what sort of dependencies that PayPal has. So look at this article. Can't recall where this was taken from, but it was relatively recently. Talks about how Coinbase, PayPal, and other Bitcoin exposed stocks battered by the crash. Well, everything was battered by the crash, but they're kind of throwing PayPal into that mix. Well, in October of 2020, PayPal allowed their users to buy, hold, and sell cryptocurrency directly from a PayPal account. We have no idea how lucrative that has been for the company. We know for firms like Coinbase and Robinhood made a lot of money, and of course that evaporates as soon as all the speculators run out of money and realize that they're not going to trade their way into a better zip code, speculating on assets that pretty much a lot of them rely on greater fool theory. So in 2021, they added, say, PayPal added commercial crypto payments. In June of 2022, they added the ability for cryptocurrency to be deposited and withdrawn from their platform. And they make the remark that crypto users log in twice as much, 50% log in every day. Of course, they're logging in to see how much money they lose every day. So, and of course, look, we've always been very skeptical about cryptocurrency. We hold a little bit of Bitcoin, but this idea that cryptocurrency is an investment is a very bad idea. So we need to know what's PayPal's exposure to cryptocurrency, and we don't know that, and that's a problem. Now, the other component of this firm that we find to be, let's say, declining a bit is this cross-border transactions component. Now, this is commonly referred to as remittances, and this picture is quite dear to my heart. I walked across this little walkway here every day for about 8 years, going to work at the firm I worked at in Hong Kong. And every Sunday, this is a common sight. You see all the Filipino workers there having lunch and socializing because that's their day off. Well, a lot of money that PayPal realizes from remittances is money going to and from the Philippines. So this idea of cross-border remittances we've examined, and I'll put a link to that article in the description of this video, along with some other articles that relate to what we're talking about today. And we looked at the remittance thesis, and we didn't find it very compelling. Now, PayPal entered remittances when they purchased Xoom in 2015. They talk about how their cross-border transactions provide higher revenues and operating income, and that in certain markets, cross-border trade represents their primary or perhaps only presence. And just as a side note, 55% of PayPal's revenues come from the United States, and that used to be quite a bit higher, and they've done a great job of international diversification. However, when you look at cross-border remittances, so there are some pure play firms out there, one called Remitly, and we did a research piece on Remitly looking at how valid this thesis was. And our belief is that Western Union is going to be extremely difficult to displace. So TransferWise out of fintechs is certainly the leader there. But when you look at firms like Remitly or perhaps Xoom, trying to compete against Western Union is going to be very, very difficult for reasons discussed in that piece. What we see here for PayPal is that the percentage of their cross-border transaction volume declining over time, 2019, 18%, and down to 17% the following year, then down to 16% last year. And if you look at the raw numbers, they are indeed starting to decline in terms of their growth. And I believe that this last quarter, they actually declined year over year 7%. So it's very competitive. There's only so much, we believe, only so much market share that fintechs can capture because Western Union is very entrenched. Lots of people that use Western Union don't have smartphones, don't use sophisticated apps. Western Union has offices all over this planet, and they'll be very difficult to displace. So that if PayPal's growth estimates, I believe there's somewhere around 11% for next year. If PayPal's growth estimates rely on the growth of cross-border transactions, then, well, we'd like to keep an eye on that because there may be a problem there in terms of them being able to keep up the same growth that they've had. Now, the last component of PayPal's business we wanted to talk about that we don't necessarily care for is this idea of buy now, pay later. And somewhere around 30%, let's see, well, that would be more like 20% of Americans are using this with an average of about $1,000. And if you are familiar with the concept of layaway, this is a bit different. This is like layaway, except they give you the product first and then you pay for it. So the average American has about $1,000 buy now, pay later. It's what it pretty much says. At the time of checkout, they say, hey, do you want to make payments for this as opposed to paying it all right now, right? $1,000 is quite, let's say it's a nominal amount. Well, PayPal just increased their buy now, pay later from $600 to $10,000. And then the individuals that utilize this service can make monthly payments across a 6 to 24 month period. Essentially, they're giving out unsecured consumer loans. We're not a fan of that at all, especially in the United States, where a third of people that make $250,000 a year live paycheck to paycheck. The citizens of the United States don't exhibit a lot of financial responsibility as a rule, and it's gotten them in trouble before, and we're very leery of that. So we don't like investing in firms that rely a lot on unsecured loans like SoFi, for example. So when we look at the amount of money that consumers and merchants owe PayPal, so this is loans that PayPal is issuing, that's increased sharply from 3.6 billion to 5.3 billion, I believe. This is quarter over quarter, and that may not be that large of an amount, but again, we need some granularity. So there's a big difference between a merchant. So we use PayPal and they offer us a loan and say, based on the amount of money that you're getting from subscriptions, we're willing to loan you this amount of money, because they know that over time they can actually see the income that we have. They can make some judgments about the predictability of that income and then decide what money they want to loan us at what rate. And they make us loan offers, right? And PayPal, we actually find their fees to be quite exorbitant, so we don't use a lot of PayPal's functionality. But there's a big difference between that and loaning Gwyneth from HR $10,000 so she can buy that Coach purse before she gets laid off. So we're very, very suspicious of this whole buy now, pay later. We've looked at firms that do this. We don't like them. Apple just jumped into this business. There's no barrier to entry, and we don't like it. So again, there's no granularity to know, how much of this is merchant versus consumer in terms of their current loans outstanding. But this buy now, pay later will be primarily consumer. So you can expect the consumer part of that equation to go up quite significantly. So just to conclude, when we look at PayPal, the main problem that we have with this firm is the opaque revenue reporting structure. We need to see where they're making their money, where the growth is happening. And when, they talk about expanding into buy now, pay later, and, they continue to offer new crypto functionality, and their Xoom, efforts for cross-border remittances, the growth is stalling there. We just are a bit suspicious about their ability to hit their $50 billion revenue target by 2025. And again, if we had just a little bit more color in terms of their revenue reporting, that would help alleviate some of those concerns. Firms also on the larger side. So it's almost like, if you were able to get into PayPal a bit earlier in terms of the payments, that may have been a bit more compelling. Now, the advantage, of course, is that they're quite a big firm now. They're trading at a discount. So there's a case to be made for PayPal, being a bargain. But we don't believe investing in a firm that doesn't provide transparency around how they're making their money is a very good idea. So PayPal isn't a firm that we would be investing in, but you certainly may have a different tolerance for risk. So please put your comments in the comments section. Make sure to subscribe to our channel. Thanks so much for taking the time to join us today.